What's up, YouTubers? What up, investors? Ken here from Dyslexic Investor, and we're going to be looking at Jerome Powell's unwielding fist of unlimited quantitative easing. So what does this mean? Like, what does QE mean? What does quantitative easing means? Basically, in this particular standpoint, it's basically the Federal Reserve is taking every measure possible. So just the last week, they slammed interest rates to zero, or they cut rates to zero, which is they did in 08-09, the financial crisis. But they're empowering and creating on buying 700 billion of assets. Again, this is a very vague, that no one really knows what assets they're buying. They're buying treasury bonds and mortgage-backed securities, which, if you remember that word from 08-09, of those Fannie Mae and a lot of the other various mortgage-backed securities that were purchased and kind of pushed around through the financial system. And it looks like the Fed is buying up these are different derivatives that we're talking about now. They have been under a little bit of more scrutiny, but they're still kind of the same thing. So basically, the simplest way of putting it is basically the Fed is taking extreme aggressive measures on trying to get the economy back up and rolling, creating an environment and creating a effective capitalist market, which is kind of silly because we're having a third-party vendor coming in and just dumping all the money that everyone would ever need. I'm not against it, but it's not a complete capitalist system. So they want to kind of help support numerous companies. So they're having the $300 billion to support companies that are hurt by the shutdown due to the U.S. economy. This is somewhat separate from what we're going to be seeing. Hopefully, that the Hill passes. That could be a $2 to $4 trillion deal, or a bailout, or a stimulus package, depending on what aisle you look at it, to help small business owners, on top of big airline companies, to a lot of oil producers, to help them make payroll, help them get back to floating above the water, and help them try to make it in the marketplace. Because this is slightly different than the financial crisis, where it was a couple bad apples. This is honestly gets to the point where this is a world health crisis, pandemic due to COVID-19. The government has to step in, honestly, my honest opinion, to kind of help here, especially the small business owners and the individuals who live paycheck to paycheck. So if we look here in the SP 500, again, this is on a daily chart, 1 week, and I am going to be doing a video regarding my spaghetti charts that you see here. I got a lot of comments of saying, "What the Hello Kitty, Ken, are you having here? It looks like a bunch of spaghetti, rainbow spaghetti twirled together." It all makes sense to me, and again, it's a little bit different for some folks, but that's fine. So we're looking here on SPY, which is the Standard & Poor's 500 ETF. So we closed down, we hit all-time low today. So a lot of this quantitative easing kind of came out on Monday, which is today, and then following last Monday, it came out with a lot of other implementations of interest rates going to zero, and kind of just trying to interject cash. With on top of waiting for the stimulus package to come out, we need to see what's happening here. You see here, we closed at 22, let's call it 223. We're kind of trading slightly above it, so around the 26 level. Technically speaking, we broke the low here, so we have to wait for everything to reset. Potentially hoping to break this or close above this low tomorrow. I want to close above 2030 in SPY to kind of stop this overall downtrend and kind of start leveling off. It's going to be quite tough because these moving averages are pointing pretty much at a 45-degree angle down, and it's going to take a lot for the 21 and even the 8 exponential moving average to kind of level off and kind of make more of a smoother landing, because it's still heading straight to the ground. So there is no particular bottom in place. Like I said in my previous video as well, SPY has not touched the oversold limit on the RSI on the monthly chart. We potentially could see that, and I think the price target for that is around $200 in SPY, potentially at 195, depending on how the RSI gets there. Then we're looking here on a weekly chart. We have definitely barely touched the RSI here. You can kind of see here it is barely, it's not touching it. If it would touch it, you would see a different color. I'll show you what it looks like if you touch it. It would look like here. It would look like this right here. This little like yellow, light blue, teal, navy, or a baby blue kind of color. And it hasn't touched it yet. I think we're fairly close to a potential short-term bottom, but I think once longer as this pandemic goes on, there could be, the risk is going to be skewing more to the downside, of course. I think a lot of people kind of have priced a lot of things in. Mostly everything that people know is basically shut down. There's 7 to 10 states here in the United States that are on stay-at-home basis, which is, again, super vague, as you can know that everyone in California and Florida is at the beach and all this other kind of stuff. They're supposed to be staying at home, but yeah, that's whatever. So that's a little frustrating, but looking here, this is a super interesting one I've been always pointing out at, is the standard deviation thing. So standard deviation is basically from the average range, which I use as the 21 exponential moving average. What is the standard deviation 1, 2, and 3 from that? And that's usually what the stocks and the indexes kind of stay within. Once it breaks out of the 3 deviation, it usually snaps back pretty fast. As you can see here, we are extremely out of this standard deviation, and I have not seen anything like this. And I have looked back all of these years to 2001. There hasn't been anything like this. It's kind of like 08, 09. You can kind of see it snapped back, but it kind of leveled off and potentially made another close, made the overall low. But it didn't make a super snap back, like a super snap out of this trend or this deviation pattern that as much as we're seeing here. Because that what it kind of comes down to is how fast we've dropped and how quick we went from surfing at all-time highs down to basically trading at like 2017 prices. And it just happened so fast. So what needs to happen on this particular chart, these deviations are going to start coming down drastically, and this most likely will be trading in a range of, again, it could be anywhere from 200 to 250. It's going to be trading quite aggressively, but I feel like it could be trading in that range quite some time. So you kind of see here some of my alerts I have set up. I kind of want to watch what's going on here. We could have another pullback, pull down in the market for sure, but you can see here on, this is a weekly chart, we've had a boatload of selling out for almost 3 weeks now, of just constant selling. And you can see here on the chart, again, this is completely down. So if I pop this out again, you don't see that much selling. You do see it quite a bit here on the bottom. You see 2, 3, 4 weeks of selling, and then you see a couple green days. Those green days help kind of level things off. And this is on the average volume. So anything above the little line here is more than the average for that week. So most of these times it's been double or 50 to 25% more on average. And you see it up here. We are up at least 3 times, maybe 4 times on one day. The normal selling volume, and again, that speaks to how fast we got to these levels, and what could happen next. I'm hoping, I'm a little more optimistic than some people. I think that we could easily trade in this range. I can't call a bottom because that's impossible. I don't have a crystal ball, but I feel that looking at the charts and seeing on what has happened, that we potentially could be trading sideways. I'm hoping not for another drastic pull down, but again, it could happen. It did happen in 0809, which we thought where we bottomed, but then we kind of just traded sideways and kind of sank lower. Again, that could easily happen, but it can come back to the XYZ pharmaceutical company came out with a vaccine, and bada bing, we could be flying back up to 300 plus on the SPY. Again, guys, thank you so much for watching. If you have any questions, please leave it down below. Don't forget to like and subscribe. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace!